Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Markify. I'm your co-host Joel Alconin, along with Dennis Dick, and we have Anne-Marie Baiynd on the line. She's an author and financial analyst. She's best known for her book, The Trading Book Course: A Practical Guide to Profiting with Technical Analysis. Anne-Marie, how you doing on this Monday morning?
I'm doing well. Interested in watching this bounce in the broad markets, wondering where the sellers are going to try to come in. Things look really a little bit bullish, really.
You don't sound very convinced, Anne-Marie. You do not sound convinced at all to me the way you said that.
Well, the jury certainly is still out. But we are making these higher lows, and we've got ourselves a little bit of a wedge / sloppy sort of channel event moving, and it'll be interesting to see what happens. I suspect that the sellers are really going to try and take us down off of, and I'm talking about the ES here, in the pre-market. It's going to try and take us down off of that 1964. So far, pretty good, but buyers really putting up a little bit of a fight here. So, when the markets are this unsettled, my favorite thing to do is sit on my hands in terms of watching what's going on, because I think there's a little bit of a battleground event here. Some folks, again, trying to capture any kind of upside motion potentially left in the market, and then others very, very convinced that we are at the beginning of some sort of big breakdown and big bearish pattern. And we very well may be, but in the beginning throes of that, we are going to accelerate into resistance quite repeatedly until things break down, because it's been a very bullish pattern for a very long time.
All right, let me throw one. Go ahead, Dennis. Go ahead.
I was just going to say, it looked like on Friday, and often if I look back on these, when we talked about the March expiration, you get to these triple lich or quadruple lich or whatever you want to call it, and often you'll see big moves happen on those days. And we obviously saw the big down move. And then usually the Monday, sometimes the counter moves swing. And a lot of times those big moves are just institutional order flow, as institutions are jockeying their expiring futures, their expiring options positions. That can really push prices in one direction on those days, and sometimes you get a bounce back. That's what this kind of feels like to me this morning, is kind of the bounce back from the option expiration sell-off that we had on Friday. And Marie, do you look, first of all, I know you stick pretty close to the technicals there, but do you consider if, you have a technical breakdown on a big day like an option expiration, and do you look at it like maybe, that it's not as significant, or I'm just not sure if you incorporate that into your analysis?
I do very much so incorporate that, and my philosophy is this: a big breakdown gets retested, and the reason for that is generally unknown to me as an individual, but technically what I see is the following. When a big level is broken without any kind of monumental catalyst forcing something in one direction or another, and this is particularly true in stocks and generally true in the markets, we come back into the spaces that we should have held inside of that break. And that space really, to me, is around the 1964 area. If we were supposed to have held that region properly, we would be coming up into the region and hold, and it would violate the entire motion of Friday's move. A lot of times you do see that motion comes through. People go, oh, there's the break. They enter into the move at the break, and then the break is not real because it's immediately recaptured in a follow-up space. And we particularly see that in this kind of environment. And so what we have to look for is, how much of a retracement do we get? Obviously, value buyers look at this and they go, you know what, this is a good space for me to pop back in, because when it comes to resistance, if it doesn't go up, I'll still capture some gains. And if it does go up, I'm in a great position to see the upside momentum. And really, on the dailies, we're still looking at the tighter moving averages like the 10 and the 8 and the 15 and all those weird numbers that people look at, they're still holding upward, and people are going to try and capture that event space. So I'm in a wait and see space, but I definitely look for those breakdowns at the end of those quarterly moves, or those quadruple witching and triple witching spaces that involve a lot of flow. I always watch for them to reverse their move.
Anne-Marie, I just want to talk to you a couple, just going along these lines here. Do you lean on that pre-market high at all, 64 and a quarter? Because, I like to do my daily levels. I got nothing in the 60 handle. No, Friday's intraday high at 67.50 is what I'm keeping an eye on. And then also my big key for Apple. Apple held up really well on Friday after the open. I mean, that was it. The low was in, and that held up. Now you're popping up here. And I also have that flirting with Friday's high at 114.30 and pre-market high at 114.50. So will you use the pre-market levels as are you waiting for that 67 and a quarter or 67 and a half? You waiting for Thursday's close, 77 and a quarter? How much emphasis do you put on the pre-market levels that are given?
Well, I'll put a lot of emphasis on those pre-market levels if they are near prior regions of congestion. And interestingly enough, this 1964 and a quarter sits right here at congestion levels on the 16th, which would have been Friday, Thursday, Wednesday. And so that number actually becomes very important. It's where buyers initiated a move upward, and now they're coming back to retest those areas, and they're being met by sellers at that space. And so 1964.50 really ends up being that breakout area where those sellers that are trying to establish that peak there are going to get overrun. And then we look at that 1967 area. That's one of my first target regions on the breach out over this pre-market high. And so I will look at these pre-market levels if I can look to the left and I see that volume and price action events have occurred there before. If not, then it becomes, the jockeying event of the pre-market guys going, you know what, I'm positioning myself that if it moves forward, I'm going to be in the right space. Or if it moves backward, I'm going to be in the right space. And so that will really be the way that I look at that. I always look to the left to see how much arguing has gone on at that level. And it will give me a baseline for a rejection zone. So this morning I said, you know what, the big deal is going to be getting up over this 1964 level. And indeed, it's back down from the top of it. And that really, to me, is because those buyers from Wednesday that established that as a base are now looking at that region as resistance.
Anne-Marie, I want to jump into some individual stocks here with you. And the first stock I want to look at here is Twitter. And it's interesting because I've been noting here for about the last couple of weeks that Twitter's correlation with the market seems to be negative right now. It seems like when the market has a bad day, money flows into Twitter. And when the market has a good day, it seems like money comes out of Twitter. And there was a story on Friday because if you look at the trading action, obviously the market got really beat up, but Twitter was strong and it closed fairly strong as well. First, what are your thoughts here on Twitter itself? And secondly, what do you make of, this negative correlation suddenly with the market?
Well, I think that that's probably a fleeting thing. If it is real, it's not going to be sustained because we don't normally see that in general. And so when something ends up being fleeting, my technical decisions always come back to what is the chart doing. And you know what? Twitter is surprising me here because it literally it's been in the same trading range since the 31st of August. And it's just been sitting essentially sideways in this big pocket that's about, 2660 to 28.50, somewhere around there. It's had little edges up and over. But this chart is really trying to hang on and build somebody's trying to buy it up at 26.60, 26.70. I mean, there is somebody or a group of people going, when it gets into that area, let's just buy it up. And interestingly enough, that's where it happened to be on Friday and Thursday and Wednesday and Tuesday. I mean, it's been there all week. Last week and the week before, it's come into the levels and moved. And so it's obviously getting ready to do something. What is that? You got me. But I would say this, at the bounces up here, momentum is sharing with me that my buyers should be exhausted. They should get exhausted somewhere soon in the next 40, 50 cents. And then, we look at that downside motion again to see if the chart actually has the juice to get up into its 50 simple moving average, which it's, pretty far away from underneath, which it should reject.
SF Bright G's making a good comment here. It was an expiration rollover move. People rolling over their positions maybe from month to month. Love the support down there. 1, 2, 3, 4, 5 lows in a row between 26.80 and 26.99. I kind of had a theory talking about this one. Maybe the 28s, they kept the lid on it. The guys that were short the 28 calls because they got it up to 28 and a quarter and then they beat it back down. So that you're going to get a quick move here. We open up 28, we hold 28, hold. I think you see a nice move over 28.55, but this 28's a real critical level, and we'll see how it does. In the chat here, Sun Edison, SUNE. I mean, this stock has just been tarred and feathered here. And I know it had something to do with earnings. I mean, you see the big drop here from over $30. Now just hanging out here at the 11.20, 11.30 area. I mean, not the prettiest looking chart, but if you're looking for a swing trade here, Anne-Marie, what do you think? Maybe taking a little stock here and hoping the lower the move is in?
Well, I tell you, for something like this that looks to me like it's got a little bit, here's what you want to see. You want to see this drop down a little bit and give you a higher low. So far, it's pulled back, but the rotation is still not in a space that I would anticipate. I would anticipate somewhere around 979. So how do you trade something like this that looks like it might move? Really, some of the best things that you can do is look forward, October, November, something like that, and do a short put spread. That will allow the chart to jockey. If you do a short out-of-the-money put spread, that'll allow the chart to jockey down into the support region, not leave you with too much trouble, and then have it bounce. Me, I wouldn't touch that just yet. I am a little bit conservative about buying stocks that have fallen through the floorboards. I'd like to see the chart hold. Now, somebody might argue, hey, listen, that 1050 level held fairly nicely, and it's a region that a lot of work has been done, and that's true, except I can't for the life of me get up over my 50 simple moving average on the 4-hour for any period of time. I will either accelerate and collapse under it, or I test it and simply collapse under it. And, if we can't do that, then from a swing perspective, there's not a big vote of confidence about what's going on here. So from my perspective, when big money starts moving into these places, they still use really simplistic things like, is it holding the 50? I mean, they do that. And so when we take a peek at something like this and we go, you know what, it's nowhere near the 50, a test of the 50 on the daily would be a beautiful run to the upside. But until it can really start hanging on to these levels above, or it comes back down and gives us a fairly nice double bottoming around that 1050 area again, maybe it dips a little lower into 10,980, something like that, then the real value steps into that space, in my mind.
thank Anne-Marie Baiynd, author and financial analyst, trader, author, and financial author. Her book, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis. Anne-Marie, thanks so much for coming on. I didn't get to talk to you about kids going back to school or anything, but we'll do that when you're on again. Thanks a lot. Great.
All right. Thanks so much. Have a great day. Good luck trading.